And just want to introduce our panel here. Very excited about this panel, the first panel of the day. Growth Focus Finder, how investors are leveraging their entrepreneurial roots, next-gen family members, and unique models to allocate and scale. We have Kyle, Neil, Lane, and Roland here in the panel. So we can just go right through, just take 2 minutes to talk a little bit more about you, what you're looking for, what your business is, what your family office is, and just give us a 2-minute introduction for the room.
Hi, my name is Lane Kawaoka. I grew up here in Hawaii. A little bit of background on me. In a previous life, I used to be an engineer. I bought rental properties very early, right out of college. 2015, had 11 rental properties. And then that's where I got into real estate syndication, buying apartment complexes. Today, as an operator, over $2 billion of real estate acquisitions. But as you guys all know, interest rates went up the last few years. So it's hard to make deals pencil with the holding costs, insurance, taxes, etc. I got one of my properties, taxes went up $150,000 to $300,000 in the last few years. So I also stand here as a multifamily office representing my clients' money to find deals outside of the world of real estate. So I wear a couple hats: real estate operator, multifamily office.
Thank you. Thank you. It's a really complete panel. We have a little bit of tech, real estate, a lot of different managers here. How are you guys scaling and maintaining their balance sheet right now? Sounds good. How about you, Lane?
So we have a little bit of more contrarian point of view. I don't think I can predict when big ideas will fly. So I invest off of P&Ls and financials. That's why I like apartments, because you can look at the last 2 years P&Ls, see the run rate. We've developed 500 multifamily workforce housing in the past, but that's about the only thing that we'll do that is a guess shot for us. I think what's been successful for us is finding people that we've grown up with. I think that's our unique thing, is we're grassroots. So general partners, vendors, like these are the people that we're finding a deal flow from because we had a previous working relationship. So case in point, when we're going through 2022 to 2024, we needed to bring in contractors that needed to work with us on pricing. So where did we find those people? Through our relationships. And these are the same people that we worked with who also have big family office portfolios, bring us in the deal. And these are these kinds of relationships that we've found from a grassroots point. So it's not particular any industry, but it's more for the people and their relationships that we've worked through by first working as a vendor or consultant first.
Yeah. And that's something I always advise. A lot of investors and family offices, they're not looking to do one-off deals. They're looking to find partners that they can grow with. It's dating. So I really appreciate you mentioning that point. So now, regarding real estate and other core industries, how are some ways that you guys are utilizing special deal structures or special technology to enhance some of the efficiencies or opportunities there?
So for real estate deals, it's very common that a developer gets stuck without a couple $1 million, right? Their funding gets cut short, the banks freeze up. We've been in the situation ourselves as operators, so we empathize very well when people run into this type of situation. I've seen a lot of deals come through like Austin where this is the case, right? And this is where the opportunity comes up. Hey, needs $2 million to get over the hump. We find a lot of these relationships by working, again, this is with grassroots relationships with the real estate brokers. How many family office people talk with brokers on that level? Well, we do, right? Because we're on the level. So those are opportunities where somebody is a little desperate for money. We can work with that.
Yeah, it allows you to see deals first and at better valuations. Thank you. And regarding next gen, I know we mentioned a little bit of the silver wave. I know some people are utilizing seller financing and helping some of these boomers retire, which their time is more important than the business itself. So are you guys implementing any next gen programs with any of the investments that you guys are doing right now? That definitely saves a lot of time, but I think that Lane is going to mention now the qualitative side of things a little more.
So the low tech solution, because we had to cut our underwriting staff when in last few years, because we're in acquisitions mode, interest rates went up. So we would just send deals to our brokers and then the lending broker, right? Hey, we're going to qualify on this one. This thing going to underwrite. So they didn't really like that after a while because they caught on to that little game. But then the high tech solution, and when AI came on board, I have like a checklist of 12 quantitative things. So like things that like people will fudge are the property management fees in this range is if laundry isn't implemented in, what range is this in? Not all 70% or more of your units are going to adopt laundry washer units, etc. Quantitative things to spot check, and then if it doesn't hit on that, we don't even waste our time. A lot of people in industry say they look at 1,000 deals. I'm like, that's a waste of time. Why would you spend an underwriter to do that? I would say we probably go through a couple dozen of deals. We try and find one good deal a quarter to do, but then AI has made that pretty easy. Of course, we then have a human do it, but AI helps.
Before I open it up for questions, can we just go down the row and provide the audience with $1 million insight, whether to avoid a mistake or something that has really helped you get to that next level? Thank you.
So we focus on multifamily real estate because that's how we operate. But when we go outside of the real estate world, we did some online businesses. We will usually go out to and bring in a third-party consultant. Usually this person is our friend because we have a lot of friends in different groups, a lot of founder groups. But we'll usually throw 30 grand at them. So maybe call this the 30 grand rule. I don't know where that number comes from. If you multiply it by 12, $350,000 a year is a nice, hey, that's a significant amount of money, plus or minus 50 grand, who knows? But just to have somebody on there to give you a third-party insight or a third-party report, look at P&Ls. If I was going to look at a CPA firm to buy, I would be really interested in looking at for an AI firm as opposed to just a Philippine outsource deal like that. But I would bring in one of my CPAs that we use to come in and just look at the books and verify things for us.
Yeah, double clicking on that. Daniel mentioned that earlier. Focus on what you know your strengths and weaknesses, do a self-discovery assessment, and then hire other people that can bring that missing piece. So do we have any questions in the audience for our panel? Right over here. Just 1 second till the mic gets to you. Thank you. Okay, can we give it a round of applause to our panel right over here?